Hello and welcome to the launch of the 22nd Annual Warrington Property Review. The review provides an in-depth analysis of the Warrington property development and investment market, showcasing our economic performance, success stories and ambitions for the future growth. In the 22 years the review has been undertaken, over £2 billion of investment spend in Warrington has been recorded. Over the years, the review has evidenced Warrington's growing reputation as a business and investment leader consistently, outperforming other towns and cities across the UK. Of course, the landscape has now changed. The COVID pandemic has brought unprecedented challenges to us all, but I firmly believe that the exceptional resilience of Warrington's business sector and our ongoing strength as a great place to live, work and invest leaves us in an excellent position to be a leading destination in the economic recovery. It's a time for realistic optimism based on previous strong performance investment. The crisis has shown how resilient Warrington's business sector is. Our businesses are showing real positivity, adaptability and a willingness to work with Warrington & Co and a range of other partners. Warrington Town Centre is alive with activity once more, with traffic in the Times Square car park almost back to the same level at this time last year. The large number of people returning to our shops, restaurants, pubs and bars, and of course the stunning new Warrington Market. I've just seen Warrington named as by the Centre of Cities as one of the leading destinations in the UK for footfall increase since non-essential shops reopened. It's great news for our town. Warrington's economic performance remains robust and buoyant. Despite the pandemic, we have maintained our reputation as a town which offers an excellent property investment experience. High levels of activity continue at Omega Business Park, which is currently the largest mixed-use development site in the northwest, and a large number of inward investment inquiries continue to come through from overseas companies looking to invest, as well as from UK companies looking for new sites, including Bircham Park, Dayton Park and the town centre. In these extraordinary circumstances, we are all having to do things differently. Today's event is a good example of this because for the first time we're holding our annual property review virtually. Today you will be able to see and hear about Warrington's ongoing economic success story through statistics and reports independently commissioned and compiled and collated by Warrington-based commercial company agents, the BE Group. I hope that despite the change to the virtual platform, the 2020 Property Review will once again provide you with an invaluable and independent analysis of Warrington's economy. I'd like to pass on my sincere thanks to a number of businesses who have kindly sponsored this year's Property Review. They are Vinci Construction, Muse, Orbit Developments, Baker Mallets, Miller Developments, Cheshire and Warrington Local Enterprise Partnership, Leach, Rhodes and Walker, Turner Townsend, FDR Law. I bet you'll agree that the significant achievements highlighted in this review, along with the many great strides we're already making in economic recovery, give us every reason to feel extremely optimistic and confident about our future success. As Voltaire reminded us, optimism is the madness of insisting that all is well when we may be miserable. Let's remember we have many positives to look forward to in 2020 and beyond in Warrington. Thank you.
Welcome to the 22nd Annual Property Review, this year presented in somewhat different circumstances. Before I get into the findings of this year's report, I'll give some background first on its format. In 1998, we took the idea of a property report to Warrington Borough Council, as at the time we compiled property data annually on the town's industrial and office deals for our own purposes, but we were regularly asked by others for that data, so we thought it would be a good idea to actually publish it. The report's been published every year, and with Warrington & Co, we've presented the findings to a growing audience. So those joining for the presentation for the first time, the format has changed little over the years. We bring together transactions from the previous year in the office, industrial and investment sectors and provide an overview of the retail, leisure and residential sectors. And a key element of the report is the performance of the economy, and in view of the impact of COVID at the end of today's presentation, I'll just touch base on how Warrington seems to be faring today. In 2019, there were some key economic indicators of the town's continuing strength. Warrington was found to be the third largest financial centre in the northwest after Manchester and Liverpool, according to a report by City UK. Around 14,750 people are employed in the financial and professional services, or 13% of the working population. Warrington South was the second most entrepreneurial constituency outside London, based on company startups, with 64 new companies for every 1,000 people, according to a survey by Red Flag, and that compares with a UK average of 9.34 companies per 1,000. And Warrington was ranked in the top 20 destinations for high-growth technology companies in a survey by Tech Nation, placing it ahead of Manchester and Liverpool. These strengths are very much reflected in the transactions we record every year, and so getting into the 2019 figures, this slide shows the headlines for the year. In 2019, just under 248,000 square feet of office space was let or sold in 39 deals, just below last year's floor space total, but an increase in the number of deals. Industrial accounted for 711,000 square feet in 47 deals. And investment saw 24 recorded transactions, similar in number to 2018, but in terms of value, around half that level recorded in 2018. Turning to the details of the report, and starting with the office sector, the long-term take-up of floor space shown here puts 2019 into context. As you can see, the average annual take-up is the black line and is an average of 261,000 square feet. So last year the figure was marginally below that at 248,000 square feet. When we look at take-up by size, 22 of the 39 deals are below 5,000 square feet, and that size range has consistently seen the largest number of deals year on year. But above 5,000 square feet, the market remains strong, with another 17 deals, 2 of which were in excess of 20,000 square feet. And they were the freehold purchase of Sankey House at Birchwood Boulevard by Your Housing Group, taking a building of 28,000 square feet, their second largest office in Birchwood. And at Dayton Park, Orbit let 22,000 square feet to Canadian engineering company Stantec, and which will serve their water industry clients in the northwest. Other deals above 10,000 square feet around the town included MHI Vestas and BAM Nuttall taking space in Birchwood, 360 Resourcing bought a building at Webster Court, Westbrook, and Ainsworth Projects bought the old Academy building at Bridgefoot for conversion to residential. The next slide shows the splits of all deals on a geographic basis. Birchwood was the largest single office location in Warrington with 16 deals. In most years it accounts for much of the activity, but last year the town centre was not far behind in terms of deals with 14. And a number were at Centre Park, including accountancy firm Brookson taking 2 buildings to expand its presence there. 11 of the deals were freehold, with Your Housing paying the highest price at £168 a square foot. And turning to rent, prime rents levelled out, and for the second year in a row, a rent just shy of £22 a square foot was achieved at Bridgewater Place on the council-owned Birchwood Park. And 16 of the lettings exceeded £15 a square foot. And finally on offices, whilst we only record deals of over 2,000 square feet, it's worth highlighting the micro end of the market, which reflect those survey results on startups and tech businesses I mentioned earlier. The base, which opened in 2016, is a hub for tech businesses and now has 23 tenants, mainly in that field. A number of other buildings cater for small companies, Chadwick House and Genesis at Birchwood, and St James's Business Centre and the Outset in the town centre, all accounted for a good number of deals between them. Looking next at the industrial sector, the take-up last year of 711,000 square feet fell short of the long-term average, very much caused by the lack of available buildings at the larger end of the market. The peak in 2014 was driven by the activity at Omega and some substantial lettings that year. And activity in the industrial sector in recent years has been driven by supply rather than by any lack of demand. Having said that, looking here at the take-up by size, last year there were still 13 deals above 10,000 square feet, of which 6 exceeded 20,000 square feet. And you can see that the greatest activity was still below 5,000 square feet with 18 deals. 16 were recorded in the 5 to 10,000 square foot bracket. The year's largest deal was the sale of a 171,000 square foot XPO logistics warehouse just east of the town centre to Vengrove, a property investment company who've refurbished the building to put it back on the market. the largest leasehold deal, saw activity continue at Omega as Mount Park Properties let their 138,000 square foot unit to e-commerce specialist The Delivery Group. Other notable deals saw Rick's Motor Company take 51,000 square feet and Bridgewater Community Healthcare take 46,000 square feet. Looking at the area split, and there was a pretty even spread of transactions across the town, with Gemini the most popular location and represented 21% by floor space, taking over from Woolston, which has always been the most popular location in previous years. Estates around the town centre also saw strong activity, and that's possibly reflecting a more local need. Rents across all deals averaged £5.92 a square foot, with the best rent being achieved at Taylor Business Park, a 3,000 square foot building at £10 a square foot. Elsewhere, prime rents at Gemini hit £7.75 and Birchwood Park £7.30 a square foot. There were only 3 sales recorded, all under 10,000 square feet, and the best price paid by Cheshire Sandstone was for a 3,500 square foot building at £89 a square foot. The limited supply triggered development in the town, and construction of a new phase of 5 units totalling around 170,000 square feet began at Birchwood Park. And they're now complete, and interest, I understand, is very strong this year. And to the south of the town, Eddie Stobart was finally granted consent for a 365,000 square foot warehouse at Stretton, although the Secretary of State has called in the application to review the decision, with an outcome expected later on this year. Turning to investment, the investment market remained active last year, and as I've said, despite the value transacted being smaller, there were still 24 deals across all sectors. This slide shows the top deals by value in all sectors, but the industrial sector saw the strongest activity, with 12 deals totalling £34.9 million. The largest by value was the purchase of Causeway Park by Warrington Borough Council, paying £6.5 million and reflecting a yield of 8.72%. And they also bought Apollo Park at Gemini, the small leisure scheme with Travel Lodge, Starbucks and Harvester, paying £8.5 million and a yield of 6% on that purchase. Casem paid £5.3 million for Penketh Business Park, and in recent years we've reported on really strong letting activity there, so not a bad buy. And the Moorfield Group bought 100,000 square foot at Woolston to add to its logistics group holdings there. Within the office sector there were 8 deals. The largest went to a private investor who paid almost £20 million for Lingley Business Park. And Northwood, another large investor, bought the former Countryside Properties building at Centre Park, paying £3.5 million for the 30,000 square foot office. When we look at the key deals by yield, the lowest yield recorded was a sale and leaseback by t-shirt distributor the Cotton Club at Appleton Thorne at just 3.37%. 2 other deals recorded were sub 6%, a shop on Academy Way in the town centre, and that Moorfields warehouse purchase out at Woolston. Moving to activity in the retail sector, and before COVID hit, retail continued to have a tough time, with 20% of all retail sales being online in 2019. However, Warrington has been working hard to give the town centre a boost, and Warrington BID, or the Business Improvement District, launched Warrington is Happening, a campaign aimed at highlighting the retail offer within the town. And the bid, funded by businesses through a rates levy, has now invested some £300,000 back into the town on such initiatives. The big news for the town, though, is the completion of Times Square. The main retail element there is the new permanent indoor market, which opened earlier this month. On the leisure front, as I've mentioned, the biggest story was the Times Square opening, with Cineworld and The Botanist opening their doors, albeit briefly thanks to COVID. And with a number of units still to fill, the lockdown came at a critical time for the council and its development partner Muse, as they were in discussion to sign up other well-known brands. However, in the new market there are a number of new food retail outlets, and they're now up and trading, and the food court can be separated from the rest of the market for evening and for other events. And interestingly, a number of those units are on turnover rents, which, with an uncertain trading start, could really help those retailers there at the moment. Away from Times Square, the Odeon at Westbrook completed a rebrand as Odeon Luxe with reclining seats and table service. A new bar's opened in the town. One is actually aimed at smokers and is the Terrace Gin and Cigar Bar, complete with retractable roof. Last year we reported on the planning consent for the youth zone in the Stadium Quarter, and the site is now clear for construction to start on the £6.5 million project, with both public and private sector backing, and they've now signed up some well-known names as patrons there. Our final category is residential, and it continued to be a strong market in 2019. Warrington currently is seeing over 500 new build completions a year. In 2019, there were actually 536 new homes completed across 64 different schemes, some large, some small, as you can see from this slide. But Warrington's annual target to 2037 is actually 845 completions a year, and Warrington is forecast to hit its target by 2021 as completions begin to increase significantly, reflecting the permissions now in place. When all sales are looked at, over 2,000 homes were bought last year, and this table shows the average sales prices: over £300,000 for a detached and just under £200,000 for a semi, and overall prices rose by about 4.5% last year. Notable developments include Bevan Mews at the former Warrington Wolves Stadium, where consent was granted for 160 homes to Wire Regeneration, a partnership between Warrington Borough Council and Langtry. Bellway are building 64 homes at Lymm. Barrett and David Wilson Homes will construct 370 homes at Appleton, and like most developments, they'll deliver 30% of homes as affordable. And finally, a number of apartment blocks are going up. Taurus are building 97 retirement apartments in Padgate. The 8-storey apartment block by Palmas is taking shape by Central Station. Another town centre scheme will see 144 apartments on Academy Way rising to 9 stories, slowly changing the town skyline. So that ends the run-through of the 2019 activity, but what of the current situation? Well, there's no precedent for a complete shutdown of parts of the economy. But as businesses continue to open up again, what we can do is look back to the 2008 recession to try and gauge how resilient Warrington may be coming out of a severe downturn. Going back to the long-term take-up averages for industrial and office space shown here, the recession can clearly be pinpointed, with take-up in 2009 dropping to an all-time low in both office and industrial sectors. But recovery in terms of take-up was quite swift. For offices, it took about 3 years to see the strongest rise, but still, after the big drop in activity in 2009, the take-up rate doubled the very next year in 2010. In the industrial sector, from that average of 1 million square feet a year, there was a drop to around 400,000 square feet in 2009. But the next year, the take-up soared to 1.5 million square feet and only dropped again the following year due to a lack of supply. So back to the present day, and the signs as businesses return are encouraging. Enquiries did drop right out for the first 2 months and viewings virtually stopped. But as the economy picked up, the interest picked up, particularly in the industrial sector, and in fact, even straight after lockdown, the food and online retailers needed to increase capacity, and we were receiving regular enquiries from that sector. And as we speak, industrial activity does still remain strong. The office sector is more difficult to gauge, but activity is improving. The actual take-up in the first quarter was higher than last year, but that was mostly as a result of pipeline deals from the back end of 2019, having been carried over to 2020. The interesting quarter is quarter 2, April to June. For Warrington, completions actually compare very well with the previous year, and we've recorded deals totaling around 90,000 square feet, stronger than some of the other northwest centres. And what we found is the smaller interest may have dropped away, but the larger companies have pressed on to complete office moves despite that lockdown. For retail and leisure, it's just too early to understand the impact of so many businesses closing for 3 to 4 months. The real impact for many is only starting to show as they begin to trade again and come out of furlough, and the other support measures provided by local and national government. When house prices are looked at, They've actually dropped by 10% over the past 6 months in Warrington. But when the last 3 months are looked at, the fall is just under 5%. And agents have been telling me sales have been strong in the period since their shops actually opened. So overall, it's early days, but Warrington's proved to be resilient in the past, and that's down possibly to its diverse economy, with some sectors less susceptible to the economic shock than others, such as nuclear and other energy, and also distribution and online sales. But overall, we'll just have to wait and watch what happens. So that brings me to the end, but hopefully next year we'll be back face to face in more familiar circumstances.